Welcome back, everyone. I'm back and back to the videos. So my first one, as requested, is going to be a talk on the uranium sector, what I see right now and where we stand within the cycle, within the market, and all about that, all about uranium today. So I hope you enjoy. Hey everyone, just quickly, you can read this here or in the description of any video. Just remember, what I do and say here is meant to be a helpful supplement or thought filter for your research, not a replacement for it. I can be wrong, and I'm often quite early, aka wrong for a good while, which is why none of this is ever investment advice. Okay, so seeing as today's video is going to be quite extensive, I just thought I'd quickly cover what topics and what order I'd be getting to them. I'm going to start with talking about risks. I think that's a good place to start. Next, I'm going to go into recent events, then compare this cycle to the last. Next, I will get into when the price might move and what that could look like. I'm going to give a refresher on the fuel cycle and a bit on supply and demand after that, and finally, a resolution at the end. Okay, I want to start off by saying I could be catastrophically wrong if I have the wrong view on a bunch of these factors and people make decisions that don't make sense to me but may make sense to them. Prices could stay fairly low for a decade and, well, the equity in most of these companies could be destroyed. Anything also can happen, black swan, this, that, governments change, whatever. Anything could happen. So obviously, I don't think I'm wrong, but that kind of goes without saying. And I just want to note that all of my investments in the sector, I am prepared to lose basically all of their value if I am horribly wrong. And that's something people should think about when investing in something highly speculative. The next thing I want to point out is I decided to do this video based on a poll that I put out to the people following me on Twitter. And if you're not following me and you like this channel, I suggest that you come join. I'll same name as this channel on Twitter, Deep Value Co. I often put out polls or sometimes put out polls and see what people want to see and what people are looking for and comment on certain things and try to help. So if you are interested, please stop by. Now, what I was going to say about this is everyone, all they wanted to see is uranium, which it's good. Well, I'm excited too. But a lot of people like to call the uranium a contrarian play, and in some ways it is, but in some ways it might not be anymore. There is a lot of excitement in the sector, and if nothing happens for a while and that fades, that's an additional thing that you have to think about. Okay, so I was gone for the past 15 days, but the past 3 weeks were really excellent in terms of fundamentals and fundamental improvements for the uranium market. Sentiment also getting better, fundamentals, and I gotta say, people at Cameco seem to be, I don't know if brilliant or magicians is the right word, because they have been doing some great stuff for them, which is all that they can ask for. So the casual observer might think I've lost it at this point. The spot price has gone down from 29, 28, or all the way down to the 25s. Lost more than 10% in a week. The Green New Deal's on TV, which wants to reduce nuclear. I'm not going to go into that because I don't have the mental fortitude to deal with that right now. But things seem terrible at the surface. So I'll start with the spot issue. Well, if you look at it, the entire profits in the sector is really close to zero. The, Forget about losses, there's plenty of them, but the profits is zero. Now, the only one actually making money is Kazatomprom. Now, they're behind on their capex, but they still have the low-cost ISR mines that are making basically the only profit in the sector. Now, lower prices hurt them most and would, well, maybe not most, but relatively, it reduces their profits. It would further decrease their willingness or ability to spend money if they're not making any. So while the lower prices may hurt all the producers, many of which have been warning that they're not making money anyway, but so they're losing more. But Kazatomprom, who's the one really at most risk of ramping up production, some might say, others would debate it, but they are hurting more now with the lower spot price. They are also the ones who use the spot market most. Um, Now, most other companies are more hedged in contracts, and most of the rest of the other companies aren't in production. So really, the lower spot doesn't matter. So the cause of the spot price was not some negative shifting fundamental. It was Cameco knowing that although they have to buy 10 million pounds for the rest of this year, they also knew that some people had to liquidate at the end of the quarter, so they dropped their bids. So it's not a big negative. Now, people with more advanced knowledge of the sector probably know that watching the spot price around these levels isn't as important as watching the price of separated work units. Now, the price of SWU, the bid is, or that, sorry, the ask is all the way up to 46. The price is probably closer to 45, but it depends on where you want to trade it, which side you're trading from. Now, this is a drastic increase from a few months ago, and you can watch a prior video I made on explaining how big that is. But just a quick refresher, separated work unit price dictates if the enricher wants to be enriching the spot material, the material they bought on the spot market, into low enriched uranium, or if they want to be enriching the tails, basically the leftovers of that which wasn't good from prior, wasn't useful in prior uranium into material that could be sold in the spot. So it goes from at a certain point, the profitability of making nuclear fuel becomes better than turning waste into supply. And in the meantime, over the past few weeks, we have had a number of new reactor announcements. Plenty from China, India, United Arab Emirates, a number of life extensions all over the world. They just seem to keep popping up. I guess nuclear is not going away as quickly as some think. And there was announcements or financial aid for the reactor that's having trouble being built on time and on budget in Georgia, I believe. And there's more political support for nuclear led by, again, Bill Gates, who realizes that nuclear is the energy of the future. So when I say we've had a fantastic increase in the fundamentals in the past few weeks, I'm not exaggerating. These weeks have meant there's a path towards less future supply, all while indicating future demand growth. So now I'm going to go into how this cycle is slightly different from last cycle. And as I explain how last cycle, in my view, was different, you're going to probably see some similarities. Because in the last cycle, um, which was in the early 2000s, there were so few uranium companies, uranium deposits. And if you think there are very few this time, you should go look back and see how so few there were last time, because there were far less. But in my view, when the Russian downblending of nuclear weapons from high enriched uranium to low enriched uranium was in when that end of the downblending was in sight, utilities looked forward and they realized there's not that much supply coming from mines and they're going to need more. So when they wanted it to be guaranteed, they started rushing to the contracts. And as you know, we saw a huge spike in the mid 2000s in long-term contracting. Compare that to this cycle where you have, in my view, the utilities seem to be under the impression that more supply is coming. Now, whether that's because their consultants seem to have their models indicating more supply is coming, I can't find much of that supply, but maybe I'm missing everything. Um, so they think that the demand picture is fairly flat in the few years because again, this is what their models say. Although if you look at it, it's debatable. They know there's probably not quite enough supply on the current track, mainly because of cuts, but they think they probably would look and think there's probably more that could be made available. And they probably think it's a slightly higher price. But if you look at all the forecasts, they seem to believe that the secondary supply, that of the um, enriching of tails, is going to continue basically as is for the foreseeable future. So as you can see, they're fairly similar. Both times the secondary supply is at the heart of the issue. If the secondary supply goes away, then all of a sudden what was expected is no longer certain. Now, this time there's more known uranium out there, like in the control of companies, that is, but they the thing is about this uranium is that it doesn't show up at these prices. And I would bet that the utilities probably know that to some degree, although I'm not sure they fully look at how far out some of the supply is. Also, what price it might take. Now, in my opinion, the big question that will determine how this cycle plays out is how long will the mobile inventories last? Basically, once people discover or get to the point where they don't know or they figured out how shallow the remaining spot market is, what will the price be before that? And when will that be are the two questions that if you were to give me an answer, I could probably have a much better idea of exactly how the cycle would play out. And that leads me into the next question of when will the price move? The answer to which is, of course, I don't know. I could give you a few theories, but that's just here or there things of what might cause this. And I'm not going to get into if this happens, then I think this will happen. And if it doesn't, then because that's a further rabbit hole than the ramble I just went on. So I think that 232 resolution likely takes us off pause. Whether that pumps up the price 20 bucks or not, I don't know. I hope that the price stays lower for about another year would be probably the sweet spot. Now, I think that would maximize the investor returns. That's why I hope it. Now, more on when, if you look in the next few years, you'll see that the long-term contracts from the 2000 cycle are rolling off. And when those roll off, if the utilities don't want to rely on the spot market for their supply, they can sign more long-term contracts. Now, that being said, at these prices, they're unlikely to find too many suppliers willing to engage in the contracts. Now, as to how much need for contracting there is, if you look out and look at some different models, you'll see how much estimated contract supply is needed in the next decade. And if you look, it just goes up and up and up, which makes sense. And that is supply that if the utilities don't want to be stuck on the spot market, they will need to sign contracts, which will require a price that would satisfy both parties. Now, at this point, I think it's important to remember and point out that the idle supply, such as that from Cameco and others, who were priorly locked into contracts and are now buying in the spot market, well, that effect is basically neutral, because while it does push up the spot market and drain it theoretically, well, not theoretically, it does reduce the supply. That capacity for future production is just pushed down the line. So the capacity that would have been producing today could produce tomorrow. So the net effect on the market is not as positive as some people like to think when they talk about it. Now, as to why a lower price for now is better, in my view, well, if you look at the forecasts and they're vague at absolute best, um, it depends on what your assumptions want to be. But if you look at the demand growth or the supply shrinkage or both, and then you look at the point where that might cross over, you realize that at some point the demand will outpace not only supply, but supply capacity. And before I get into what that might mean, I just want to point out that there are some big projects out there in the Athabasca Basin and in a few other places around the world. However, most of those are not and will not be ready for a few years. And when I say a few, I mean about 5 or more years before they're ready to go into production. And even still, many of them need higher prices. Now, if new supply is needed before that, the options are much more limited, especially if you need any size of supply. And the price needed is significantly, in my view, higher. Now, we're in a deficit right now, which is a drain on inventories, basically, not as much production as demand. Now, the outpacing that I spoke about right before is completely different. Outpacing is a recipe for a holy cow moment for the utilities. And as an investor, that is what the dream is. Now, when is that moment? Well, again, I don't know, and if I did, it would make investing much easier. But the time of when that might arise kind of depends on your model. But it is, if you're looking at a model, maybe literally sooner than it looks. And I'll get to that in a second. But why that is because you need to figure out when that moment is and then deduct the time for the fuel cycle. Now, as a reminder as to what that fuel cycle is, the uranium that's pulled from the ground mostly needs enrichment prior to being nuclear fuel. This is a long process called the fuel cycle and usually takes 18 to 24 months. So whenever that moment is, you need to bring that forward by about 2 years. And there's 3 more critical factors that I want to touch on. One is being when you look at these models, that they often point to capacity. We are not at capacity, nor can we get there immediately. There will be a delay while the mines ramp up. And also remember what I spoke about it, not at the beginning, but earlier about what's going on with, or what could be going on with the secondary supply in the SWU, the potential reduction there. Then you add to that third point, which is that supply can be increased. However, you need to have 6 months for some ISR, up to 2 to 3 years to increase the supply from the mines that are ready, because they need to build. And you take that time, and then you need to add the time for the fuel cycle. And this process only starts once the price gets high enough. So that is a significant delay from a potential need for more uranium. Now, there's a point that I wanted to touch on with regards to supply, and while supply can increase or decrease, decreases in the picture can have different effects, like depletion is permanent, that's not coming back. Shutdowns, they are less severe, they're temporary, and they're replaceable, but not immediately. The secondary supply, if I'm right, and if that decreases significantly over time, then that's an unanticipated uh, reduction of supply that's not coming back potentially ever, but maybe it does, we'll see. But it's supply that people were not anticipating going offline, and then it just vanishes. Whereas, so reductions can be permanent, whereas increases are always delayed, or often delayed, I should say. There can be some increases that are unaccounted for, and there have been in the past, but most increases to supply, well, to production, require a build. Now, the reason why this opportunity is, in my view, quite exciting comes down to the economics of resource investing. Now, this example that I'm about to give is undiscounted, so it's just raw numbers, not taken over time. But if you have a company, let's say, that has 100 million pounds of uranium, and it costs you $50 per pound to extract that, between $0 and $50, your project is worth nothing or less than nothing if put into production. At $51, it's worth $100 million. At $60, it's worth $1 billion. And at $100, it's worth $5 billion. Now, I'm not saying at all that we're going to $100. I'm just saying that from 0 to 50, the project went from worth nothing to worth nothing. And then the next $50 increase after that, the project went from 0 to $5 billion. Now, what is possible? Who knows? We'll see. It'll depend on what the utilities decide to look at, and if they decide that it's time to panic or not. Maybe they don't. But just remember, the utilities need uranium like we need food. Like, we could survive for a little bit without it, but we need it. So the other wild card in this whole process that we'd have to see how it plays out is the physical uranium funds. Now, last time in the cycle, in the early to mid 2000s when it became apparent that there might not be enough uranium. A few physical funds popped up, like our Uranium Participation Corp, for example, and they started buying uranium in the spot market, seeing that the price would rise, and the price did rise, and it went up and up and up because the supply was being constrained and soaked up by this unexpected entity. Now, in this cycle, they've been appearing earlier to take advantage of the lower price. Now, this can go either way. There could be more piling in when they realize, oh, there's a risk of a supply crunch. Or if we get to a reasonably decent price, they could decide to be a buffer and start selling into the spot market and to the utilities who need them. And this could decrease the impact of the move in price. So this could go either direction and is a big factor to watch as the market evolves. In conclusion, I believe that there are good things that will be coming to uranium investors in the next few years. When exactly? I don't know. I am invested and I am prepared to wait. I don't yet know, and we can't know yet if this time will be like last time, but it doesn't need to be for there to be plenty of opportunity between here and craziness. Ooh, that was a long one, but I hope you enjoyed. Feel free to comment, like, dislike, or subscribe if you want to hear from me again. I don't always talk uranium for those who are new or found something in the past few weeks and are coming back for this. But I have some non-uranium videos planned and some uranium ones too. And that's it for today. Thank you for watching and have a great day. I will catch you next time.